Good evening, everybody. Thanks for coming. I am waiting for just another second to get something done over here at our broadcasting base of operations, and we will get started shortly. You should be seeing my screen. If you can see my screen, just put a yes or a Y in the chat. Just let me know that you're seeing a screen and hearing my voice. And of course, if you can't hear my voice, none of this really matters. But I will definitely go on faith for that. Thank you, Kelly. Nice to see you. Yeah, nice to see you. Okay. All right. Good. So for the next 30 or 40 minutes, we're going to talk about this course called Trading as a Business. It's really the science of generating and capturing market-generated profits. And the course is the result of a lot of collaboration between Robert and myself. So I do want to say, if you're looking at this on YouTube, definitely go ahead and increase the speed to 1.5, because I know that sometimes I drive people crazy when I talk too slowly. So if that's the case for you, go ahead and zoom right ahead. And for the people who are here live, if you will maybe get a text window open on your computer or something like that. I'll be asking a couple questions, and as I go through the course, definitely type your questions in now, and I will ask a few times for questions or whatever, and definitely if there's something that's just pressing on your mind that you need the answer to, just type the question in the chat, because I know that sometimes when that's going on, you can't listen to anything else until whatever it is resolved. So I definitely want to get this resolved for everybody. So let me share my screen. And we'll begin with our webinar. We surveyed a lot of people to find out what it was that was holding them back, what was standing in the way, and so forth. And one thing that's true of almost everybody is that you can get a gain, you can get a winning trade, but it seems like after the course of a month or two or three, you should have some more money, but somehow you're not able to keep the money very well. And the worst part is, if you do something that's very effective and you are starting to make those profits and you are starting to keep the money, at the end of the year you get a big surprise, because you'd be shocked to know how much you owe in taxes. So it doesn't seem like taxes is something that we would talk about in a trading course until you're successful at trading, in which case taxes, that's like your biggest risk. Anyway, if y'all could take a minute and type into the chat maybe how long you've been trading, who you are, what your profession is, just anything like that. I would like to speak to, directly to you and your background and what you're looking for. So, feel free to let me know. While you were doing that, I can tell you a little bit about myself. I have a degree in philosophy and neurobiology from Washington University here in St. Louis. I was in healthcare for a while and was unfortunate enough to get something called psoriatic arthritis, which really stopped me from doing a lot of things until it got treated correctly. So one thing that you can do, even if you can't do much else, is click a mouse button and do a lot of stuff with finance. And that was what I was doing. I've been trading probably since 1987, 88, when I took my student loan money and bought some options. Presently, I'm the executive officer at Porter Kickham. We manage $55 million in assets, depending on the day. I'm also the portfolio manager at Engineered Risk Advisory, where we do a lot of work with options and hope to get into a lot of algorithmic stuff. And Some of the favorite part of what I do is live stream family advisory, where I help people really acquire, protect, and grow family wealth and move it on to the next generation. So um, those are all the things I think that people want and want to do when they make money. Congratulations, Frank. I'm glad you joined our team. Um, and Jeremy, you're not having much experience with trading. I'll tell you what, I'm going to flatter myself and say at least you're starting off in a place where you're going to get some good coaching and advice really from the get-go. This course is applicable if you have a system for trading stocks, if you want to be exposed to options, cryptocurrency, futures, or even Forex. These are all asset classes that, very good, asset classes that show up on a screen. You can trade them over the internet. And what really screws people up is that the interface, the actual, what do they call it? The user interface, whatever, for many of these cryptocurrency places looks just like the ones for a stock brokerage like Fidelity or something. And it looks exactly like what you might see in a futures exchange. But there are rules that are very, very different across each of these exchanges. And there's characteristics of these assets which are tremendously different. And it's easy for you to get the idea that once you can see the price and hit buy or sell, that this is all the same, and it's not. So people find out the hard way because, experience is what you get when you don't get what you wanted. And if you have ever blown up an account or really suffered a loss, I don't want you to feel bad. The average futures account lasts about 90 days because overtrading, day trading, futile trading, etc. But even if you've never opened up a futures account, this is a very disturbing thing. With so many people being unprepared for retirement, Dalbar has been doing a survey for the last, I'm going to say, 30 years or so, to see what the experience of a unmanaged individual investor is. So this is a guy who has a brokerage account, doesn't have an advisor. He might use a newsletter. He might do his own analysis. But the average investor gets 4.3% a year. So the average investor is underperforming what they could have just putting it into the stock market. There are many reasons for this. And the biggest one is asymmetrical information. When you sell something, someone else has to buy it. And when you sell something, you think the price is going to go down. Surely the guy buying it does not think the price is going to go down. In fact, for each of these transactions, you guys disagree absolutely on value, but you agree on price. Always assume that the person who's trading with you knows a lot more than you do. It's better to be pleasantly surprised. But have some trepidation and a little fear when your offer is accepted. Now, some of the other things that enable big players to profit in the market and which may hurt you is that these players have certain tools that you're entirely unaware of, and we're going to make you aware of those. They have privileges that you may not know to ask for. And if I was doing internet marketing, I would call this the secrets of the rich. But they're just arcane because they're not often shared. And I guess it's because need to know, So I think you need to know. So you're going to know. I do have a little more bad news, though. The people who built this and the people who do this for a living and the people who know all this math, they know that the markets are a sea of trillions of dollars, and they know that they can take their special skill sets and apply them. So while you may think to yourself that you want to do trading as a way to get away from the work that you're doing now, all of those people thought the same thing. And they believe, like you probably believe, that by doing so, you can multiply your income really by a factor of 10, sometimes even 100, if you can do the right thing. Some other disadvantages you have are that these people they have more capital than you, they have more information than you, and they may even have more training than you have. So here they are at a firm or in a group, well-capitalized, streams of information, and here you are in front of your computer, and not only are you faced with everything with the market, but you're usually using your family's wealth, your family's money. Every dollar that you lose is a dollar that could have gone to the kids' braces or to a vacation or whatever. There's a lot of extra worry and stress on you. And it's just hard. So if you don't feel trepidation and you don't feel a little bit of insecurity when you turn on that computer, then the market will hand you all that anyway. There's nobody who leaves unscathed. So I've talked to you about the data scientists you'll be trading with, the former physicians, and so on. I want to talk to you about a guy named Caleb, who's a cattle farmer. Now, Caleb doesn't have a college education. In fact, he swore when he left high school that he never wanted to even read another book. But Caleb set his mind on learning to operate in the futures environment. He trades a contract called an E-mini, which is linked exactly to the S&P 500. And Caleb spends about, I'm going to say, 3 to 5 hours a day. So we're working on getting it to 3, taking some money out of the market. And then he goes and plays with his kid, hangs out with his wife. Caleb is a very talented carpenter as well and does a lot of rehab work. So he's just living his life, and the market is helping him do it. Trading is more than a business for Jamie. It's his whole career. He's somebody who engages in retirement planning and retail finance and so forth. But because his job lets him stay in such close contact with the market, he has a pretty simple system, which is very opportunistic. And he just swoops in and pulls, $5,000, $10,000 out of the market probably 3 or 4 times a month. He keeps his losses very small. His trades last a very short time. And I would say that more than half of his trades have been done from his phone while he was camping. So he's a digital nomad, great guy to get to know, and he's really living the life. This is my partner, Mike Kickham. Mike might come and talk to us a little bit about what's going on with institutional traders. But when we start to talk about how to retain your wealth and operate in the stock market, Mike created his fortunes by prudent portfolio management and rebalancing. So he gets his alpha from rebalancing. He's created something worth millions, and there was no trading involved. The holding periods are extremely long. So the point is that there's all sorts of ways to do this. And the purpose of this course is for you to, of course, develop a system, but really importantly, have this integrate with the whole rest of your life. So if we spend some time talking about time management and so forth, it's not wasted. This is what's important for you to be able to do this. So just listen a little bit more about me. If we are here, I started trading back there before there even were spiders. And if we talk some more and I start to get passionate about things, sometimes I have a little bit of a potty mouth. I am from New Jersey, and I have to tell you that this is what all my neighbors looked like. So if you can forgive the occasional crudeness, it's just because of this background. But a bunch of guys and gals who are not like that are the people at Lumi Wealth. It's quite a community. If you have not taken any of the other courses, then you'll really be able to. I'm sorry. I just need to turn something off on my computer here. Yeah. When you take some of the other courses, you will run into people who are very talented, very friendly, collaborative, intelligent. I love the Lumi Wealth community. So I started to talk to Robert about what it would take to really make people successful, because we saw a lot of people who gathered the information. They were able to do some trades and so forth, but it just was not, they weren't getting over the finish line with this. And it seemed like there had to be a way that we could get people from where they were at to comfortably doing their trading, increasing their wealth, and making sure that they were, keeping this very hard-earned money. So as we thought about what we would want for the course, we wanted to have a sense of community. For the people who are going to be in the course, I want to have you call me right away. As soon as you sign up, it starts. I want to have you talk to other people, because we want to be focused on getting to the end goal, which is having trading be your business. We want to show you how to get clear results, and we wanted something that was really very systematized. So what we came up for the course was this, and I'm going to let you take a look at this and also tell you that the slides from tonight's presentation will be available to you if you've missed anything or whatever. So the course is in 3 parts. The first part is surviving, and that's the part where you actually design a system that produces some profit. It wins more than it loses, either in terms of absolute trades or in terms of money. And it's something that we can start to take a look at. And when I say take a look at it, we're going to document in real time the performance, the risks, the inefficiencies of your system. We're going to tweak it. And then we're going to see if we can apply some leverage to it. Because if you have something that's really good, that's making, a few percent every time period, certainly there's a way to add a little leverage with the right risk controls and perhaps double that kind of thing. So that's what we're looking to do between the survive and scale sections of the course. Now, as I've said before, once this actually starts to work, you're going to have a tax problem. And the problem is you have to pay taxes. Now, I fully believe that people should pay all of the taxes that they're liable for, but I definitely know that lots of people pay optional taxes. That is, they don't really have to characterize their situation in a certain way, and by doing so, they have more liability than somebody who doesn't. So the succeed part is all about the structures that you'll need if this really gets going. And when I say if this really gets going, if you're to the point where you can make, $20,000, $50,000 a year from your trading, it's certainly time to protect some of that money. So I want to know if this is, or rather you probably want to know if this course is for you or not. And here are some things that you can kind of do a self-assessment about. If you're somebody who can collaborate with people, who doesn't look down on others, you have respect for people who are not as far along the road as you are, we really want that. We need you to be committed because the class is about taking action. We're really going to do this. And we need people who are coachable. And let me say this about coachability. Everyone says they're coachable because it's a nice adjective to ascribe to yourself. But when you're coached, you're going to be asked to change, and change is painful. So there's going to be tears and gnashing of teeth. Not only that, we're really talking to you about something very deep and personal, which is your money. So there's a lot of emotion involved around that also. I've done this for hundreds and hundreds of people and families, so we can make it okay. But you just have to know that in order for you to get a different result, in order for you to get a good result, some things are just going to have to change. So if it's the right time for you, then definitely we'd like to see you in the class. So if this is right for some people, it's also wrong for some people. And it's wrong for spectators. So this isn't a course you should really spend your money on if you're going to just come to it on Sunday afternoon and forget about it until the next Sunday. You don't need to spend 15 hours a week on it, but you do need to spend some time. And it is best that you have either a paper trading account or a real account open. We're going to share our trades and our mistakes, and I'm going to share my mistakes. There's plenty of them. There's a never-ending supply. And the last thing I want to hear from anyone, and you too, is, oh, I would have blah, blah, blah. I could have this. You should have that. There is just none of that. We want no jerks, because what we're trying to do is get together, collaborate, and get out of this mess and get to the point where we really feel that trading's working, that it is a business, that we're getting gains, that we're keeping, and so on. So if you could take a minute and think about this, I wonder what frustrates you the most about your relationship with the market right now. So it might be that I'm frustrated because I don't have any money. I'm frustrated because everything's in my 401k and I don't know what to do about it. Or I'm frustrated because I have a bunch of little $300 and $500 wins, but every so often I take a $2,000 bath and the equity curve is just going in the wrong direction. So think about what is a frustration for you. Feel free to type it into the chat box. I'm going to go through just a few that I've run into in my time with helping people. The first thing is, sometimes people are confused. I say, well, what's your system? What do you do? How can, tell me about it. And they cannot. They cannot explain this to another person. And these are the same people who want to remove the emotion from trading. And the best way to remove the emotion from trading is to have an algorithm. And I don't mean that you have to be a computer programmer. I mean, you need a list of steps. You need a checklist. You need a set of procedures that you can just groove your mind into so that you don't have a lot of decisions or a lot of angst about what's going on in your trade. Some people are concerned that their results don't really support a withdrawal rate. So they're wondering, how could I possibly live on this? Other people keep looking at their trades and saying, man, it seems like if I had only moved my stop down a little, if I'd only moved my stop up a little, if I'd only taken profit sooner. And sometimes, and I've done this really just 2 or 3 times, sometimes you literally hit the wrong key, buy when you want to sell, or God forbid, sell about 10 times as much stuff as you thought you were selling. Those are really hair-raising mistakes, and they happen to all of us. If you think that you can get away from that mistake by having a computer algorithm, let me tell you what a mistake will do. To err is human. To really foul things up takes a computer. The last couple things are bad entries or exits. And what happens is you don't pull the trigger fast enough, or if you're unsure, you won't pull the trigger fast enough. If you've really been studying this and gunning for it, you'll pull the trigger before there's any kind of a signal from your system. So these result in bad entries or exits. We'll work on those as we see them. There are a few very good solutions for this. And the last thing, which is really insidious, is aimless changes. Aimless changes. So my system isn't doing so good, I'm going to add this. It's not doing so good, I'm going to add that, take away the other. No one is standing over your shoulder right now asking you to explain yourself. You really do have absolute freedom when you're in front of that computer screen. And it's good and it's bad. And the bad part of it is you can make any changes to your system you want, and they're not necessarily going to be the good ones. So let's see. Chad, everything I touch fails. Okay, Chad, well, just stay away from the rest of us. No, listen, I'm just kidding. We can easily get into that. We can look for it, and I have to tell you, and I don't know you. I don't know if this is the case for you, but I would like to speak to the case of other people I've worked with. Some people have scripts going on in their mind that they're going to fail, or that things can't be very good, or that or they have a dopamine rush from too much risk. And this is stuff that if we trade individually together, we'll get to the bottom of, talk about, and we can really resolve these. So I'd like to take you through what this course entails very quickly, because I have a short attention span. Again, the first phase is survive, scale, succeed. What we want to leave you with is a little 3-step thing here over on the right, where you design a system, you develop it, you deploy it, and then you monitor it. And once you've taken a look at it, you can basically use this 3-step process to improve it over and over again. So these are the 3 phases. And the first phase is to survive. So we're going to develop a minimally viable algorithm, an MVA, a system that has just enough rules, not too many, not too fancy, and gives you some type of profit, and hopefully some type of profit and risk profile better than the market, but that's for another time. At any rate, we want to make sure that you're making some money first. Now, for many trading classes that you can buy online, phase 1 is the end of it. They'll give you a system, do this system, there it is. But for us, that's just the beginning. There are 3 steps to this. There's 3 steps to each of the phases. First, we need you to get clear on what it is you want, what kind of money you are looking for, what your prospects are, and so forth. Next, we want to get very clear on the fundamentals of the market you're operating in, some of the stuff I discussed earlier about rules, tools, etc. And the end of this phase is to get your algo, your minimally viable algorithm, documented and explained. And for some of you here, you may be thinking, well, I don't know how to design a system or something. That's why I'm here. For others of you, you already have several and you're trying to sharpen the knife, which is great. Whether you have a system or not, we're going to go through about 6 different ways that you can find inefficiencies and take money out of the market. Additionally, the first way that we're going to talk about is for people who don't really like math, who really think visually, who do better with pictures and colors. A long time ago, if you were like that, in school they kind of make fun of you. You were stupid. You could go be an artist somewhere, but there was no use for you. But now what we're seeing is that people who think in those terms think very deeply. And as we look at some of the visual investing that we'll do, it is very easy for a human to do it, and it's really hard to try to explain it to a computer. So if you're somebody who's not going to program, this is great for you. And the first idea is a momentum-based system. That's a trend. That's when the price keeps moving in one steady direction. We'll talk about that. That can be the basis for your MVA. Maybe mean reversion is more for you. When the stock is high, you sell it. When it's low, you buy it. You keep moving, oscillating between believing it's overvalued and undervalued. This makes for a lot of trading, which some people like, especially boys like us. Another thing that we can take a look at is something called information theory. This was developed at Bell Labs when they were trying to figure out how to do some advanced communication work. And the fact is that, well, you've probably all heard of signal and noise. There's a way that we can visually determine what is signal and what is noise in the stock market with the right type of graphs. And again, this is a little easier to program, but really easy to see. So if you're a beginner, you'll combine this with a trend following operation. Some of our traders, especially the ones who've gone through the machine learning course, are keeping their fingers on the pulse of the public by determining sentiment. The idea that sentiment ran the market is not new. Keynesian economics, that guy, he described investing in the market as not picking the winners of a beauty contest, but picking who the judges would consider to be the winners. And that's how you obviously latch onto a stock that's moving up and so forth. So sentiment is a possible way to look for information. Rebalancing, diversification, modern portfolio theory. I know Robert has done a great deal of work with rebalancing among cryptos and even found some alpha there. There's something called technical analysis. If you're familiar, if you know, you know. But if you're unfamiliar with it, there are a number of ways that you can manipulate time, price, and volume and get some indicators about the future direction of the market. So these are just 6 possibilities for how to figure out the algorithm that we're going to work on for your project, and there's more. So you may have read about some things, you may have developed some stuff yourself. Whatever it is, we'll get into it and see if we can't create an algorithm that works for you. So once we have it working, the next thing to do is to scale it. Because here's the deal. Think big, start small, then scale or fail. The 3 parts of the scaling phase are implementation, improvement, and leverage. So implementation is what it says. We're actually going to do the trades, whether it's paper or for real. We're going to get your trade records. My company can tap into your brokerage account and create some very informative analytics for you if you would like. That's included with the course if you open an account at Interactive Brokers. Once we have this data for you, you don't have to open an account there. You can keep your own statistics. You can enter stuff into a spreadsheet. It isn't all that hard if you can use Excel. But look, the point is we need some data. We need some numbers because we have to figure out where you're at and how to improve. And let's say that this is working. Leverage is the 3rd part of this. So are we going to borrow money from the brokerage? Are we going to use options to increase our exposure? Are you good enough that we could actually convince other investors to give you their money so that you could manage it for a fee? It's just another way to have this be a business. Now, if you want nothing to do with other people's money, I don't blame you. We can still do all this scaling and stuff. But if you are somebody who has a really good idea and $100,000, it's going to take you a long time to get independent with that. Whereas if you have a really good idea, your $100,000 and a couple $1 million from other people, well, it's a shorter road. So let me take you through what we're going to do to find out if your algorithm is working, if your system's working. We're going to take a look at some things called benchmarks, time frames. We're going to find out with some ratios whether you're winning or not. And then we can find out whether you're winning because you're lucky or you're skilled. So if you are trading, if you were decided that you were going to trade crude oil from March to, I'm going to say June of this year, you would seem like a genius because all that was a one decision market: buy and hold, buy, get out at the end of the day, whatever. So there are some ways for us to figure out how much of your winnings are due to the market and how much are due to you. And once we have that, we can do a little bit of fine tuning, and very possible that that what you have is marketable. For my part, I would just love it if we could find a few people in our classes who could fulfill the slots that are required for us to produce a hedge fund. So my goal is to have that funded by next May, and I fully intend that a lot of people in this class will be included in that. Phase 3, the top phase, as I mentioned, is where we make sure that you're going to keep this money for a good long time, and we protect it from taxes in legal ways. I mentioned before that I do a lot of this work at LifeStream Family, and what we do is really, along the same lines of this progression from one small thing to the next to the next. What I help coach people with is this. It's hard to really appreciate this. This is how the assets are distributed for people whose net worth is at different tiers. So if you have 10K, if your net worth is 10K, these are the percentages. If your net worth gets up to 100K, then you start to diversify into a few other asset classes, and even some more by the time your net worth is $1 million and so forth. And the reason for these changes into different asset classes is, of course, the safety of diversification, but also, super important, tax diversification. Just like all of these things are traded differently, they are also or can potentially be taxed differently, and you need to be smart about that. So to help people along in phase 3, or for the people who have asked for the individual help, the tutoring help, we have an app. It's called Elements, and it looks like this, and you download it on your phone. You enter certain things. You can hook up your financial accounts to the app through Plaid, very secure. You can really get a real-time picture of your entire wealth in these 10 or 12 little blocks. Now, I'm accustomed mostly to working with people who have businesses, who are engineers, lawyers, etc., business owners. Their pathway to independence is a little different, but look, here it is for traders, okay, for you guys. Again, let me orient you a little. On your phone, you're going to see this. It says things like savings rate, burn rate, debt rate, etc. What happens is that you have brokerage accounts where you're doing your trading, and we're going to make sure that those are automatically linked to a way that it becomes an income stream for you. We check the tax rate and make sure that you're not paying any optional taxes. We make sure that your estate status, which is estate planning, isn't about death. It's about how you own, control, and use things. So for you to have a corporation, an LLC, might be a possibility. For you to be an employee versus a partner, something you would want to talk about and consider, all in light of the tax rates, as well as a few other advantages. But there's this square here on your app is called total term. And total term means this. If we look at your spending rate, okay, let's say you spend $100,000 a year, taxes, everything included. You spend $100,000 a year. If you have $2 million, then your total term is 20. you have 20 years of living. If you sold everything you owned, you would be able to live at your current rate for 20 years on that. And that's even assuming no appreciation of your assets. So the thing about total term is, so many people have said that financial independence is their goal for trading, and it's a good one. So the total term is really the number that's going to let you know if you are there. Okay. A lot of places advertise that, you can trade on the beach, you can trade from a jungle, you can trade on a hike. And let me tell you, if you're on a beach with your partner and it's sunset and the wind is blowing and you're trading, you're doing it wrong. Okay, that is not what to do. You want to be independent of all this work truly whenever you want to be. Okay, so that's what it is that we teach. It is basically the purpose is to give you a continuous little machine where ideas come in at the beginning and they kind of get squirted out here when we scale them. If you're not a programmer, we'll put you in touch with programmers if we need to create an algorithm for you. If you download this deck, this is a little thing for you to consider which of the courses you might like. Okay. And now I just want to take you through. I want to ask you this. I'm going to show you some things, and I want you to tell me what they all have in common. Okay. So the Spanish flu, the Wall Street panic of '29, the Great Depression, the Dust Bowl. And the Dust Bowl, by the way, came at a time when 30% of Americans made their living farming. Nobody was working for Uber or Microsoft. People were farming, and that's what there was. That lasted for a long time, and then we had to fight these guys. Then we had to fight these guys. Then we had to fight these guys. We're still fighting these guys. And in the middle of all that, there was a cultural change, a vast cultural change, a schism between the old and the new in the 60s. If you remember the 60s, you weren't there. In the 70s, we had the gas shortage. I don't know if any of you saw that, experienced this. There were long lines. There were days at a time when you couldn't get gas. In the 80s, there was inflation, and there was that big flash crash in 1989. All these things together, what do they have in common? Actually, I have two things in common. The first thing was they all happened in the last century. That's the first thing. Yes, they all show signs of some instability. The other thing is all this stuff has happened to each of us in the last 2 years. We've had all this stuff happen. People are emotionally raw. It is a time of exhaustion for most people. And what we need to do is get ourselves very grounded, because if you have ever looked at a long-term chart and thought to yourself, man, if I'd invested in 1929, if I'd invested in 1981, the amazing growth that comes after a bear market is just phenomenal, and it's easy. So the real opportunity is to get in when things are at their worst. And if we're not exactly there, then we're getting there. We're very close. So I'd like to show you, if I'm able to, I'd like to show you on the Lumi Wealth website how to sign up for this course. And Let me just make sure that, in fact, we are seeing what I think we're seeing. Is everyone looking at the, sorry, nope, not working for me. Please stand by. I'm going to stop sharing that, and I'm going to start sharing this. Okay, so this is the LumiWealth website, lumiwealth.com, Trading as a Business. It describes the course much like I have. This is what I'm about to show you is really important. It is the course curriculum. If you're interested in the course, look carefully at the curriculum. If there's something missing that you would like to see, let me know. If there's something that makes you curious, whatever, we're really crafting this course as we go. So what you ask for is literally what you're going to get. And you'll have the choice of three alternatives. We don't have the video course yet because this is the first time we're doing it. We're about to do our first live course. And if right now the timing for you is that you're going to make that big change, that you're really committed to doing trading and as well as increasing your family wealth, your security, etc., I'd recommend the tutoring, because when we do the tutoring, you'll have access to the Elements app, and we will be taking steps to increase your net worth, make things safe for you, and to grow your wealth. So with that, I'm going to start to ask for some questions. And I know it might take you a little bit to type things in. So, by all means, just get to typing. Don't worry about spelling. Let's see, Frank, what was the website on the previous slides to join? I think I answered that when I did the LumiWealth thing. Let me see. Let me go to the previous slide to see, or some slide. Let's see. This is just basically how to get in touch with me, calendly.com, Guy Robert Porter. I'm not sure, Frank, which joining you're thinking of. So hopefully I answered it with the LumiWealth slide. Yes. Okay. Very good, sir. All right. Okay. Any other questions from anyone? I will hang out and wait for that. I know last time I left before questions even came in because I'm just so impatient, and somehow there seems to be a little bit of a lag on the chat. Yeah, good. Good. Also, I do want to cover just a couple of other questions, and perhaps I already have. One of the biggest questions was, what if I only want to do this for myself? I don't want a profession in it. Perfectly fine. Another question was, what if I'm not a programmer? The answer is that the visual investing is the way that non-programmers can fearlessly invest, very low stress, very easy. So if you're not a programmer, we'll show you how to do it visually. If you have an idea for a system, or you've read about one and you want to try it out, there definitely are programmers here. And Robert has created something called the LumiBot, which is an automatic execution program. not only that, it also does back testing. So if you think that you're going to do really good if you buy every time the red line crosses the blue line, we can check it out to an extent. So I'm happy to do that. All right. If there aren't any questions, I will say this. Look, your time and attention were yours to give. You gave them to me tonight. I really appreciate it. I know that sitting down to do anything for 40 minutes at a time is hard these days. We're being pulled everywhere. I'm very committed to everyone's success in this class, to having you get what you want. It's what I do for a living, and I'm really happy doing it. If you sign up for the class, get in touch with me right away. The class starts when you sign up, so we need to talk for 30 or 40 minutes about where you're at so that I can make this entirely individual and at the same time comprehensive. Okay, so I'm just going to check the chat one more time. We're good. Everyone have a great evening. Kelly, again, great to see you, and we'll talk soon.